Welcome to this week's update on the hedged option portfolio. Since the previous video, which was actually about 4 weeks ago now, the price has still been quite jumpy, with lots of news-based moves around US tariff headlines, for example, and the general direction has been down. I made a bit of a costly mistake in the main account a couple of weeks ago, which I've indicated on the chart here. I was just holding some short calls for an expiry, and they expired in the money. This is not a problem at all by itself, and I would normally simply roll these out in time, and possibly roll the strike if possible. However, I forgot to check the account around the expiry time on that day, as for some reason I thought they were expiring the next day. And then this meant that I was holding a bit more positive delta than intended from my short puts on later expiries. And by the time I remembered later in the day, the price had fallen another $2,000 or $3,000. So I was holding extra positive delta while the price dropped. It could have just as easily gone the other way, and I would have been looking at an equally accidental profit instead. However, as the price moved against my remaining positions, which were not entirely what I would have intended, as I said, this was an unnecessary loss of about 1 to 1.5% of the account at the time. Nothing that couldn't be recovered from, of course, but poor trading nonetheless. So let's go to the account now. Despite this mistake and the downward move in price, the equity has increased a little since the previous video, now sitting at roughly 0.28. The short-term positions consist of only a couple of short puts, which are both in the money at the moment. The delta is slightly positive at 0.06, but the theta is negative, sitting at about -21 at the moment. I'm happy with the delta, but the theta needs to be increased so it's positive. And I do have room to add a little more, so I'm going to sell both a put and a call today. This will leave the delta roughly the same as it is now, but increase the theta. So let's go place those trades now. Going to be looking at the 11th of April expiry, and I'll look around the 35 delta. Puts got filled there, so I can get a little bit more aggressive on the call order. And it took a few minutes, but we did get filled at 80 basis points there on the call side. If we look at the positions in the account now, we can see I'm holding 3 short puts and 1 short call. Delta is slightly positive at 0.07 now instead of 0.06, and we've increased the theta to 53. So I'm much happier with how this account's looking now. Let's now head over to the Delta Hedged account. In the Delta Hedged account, I'm making a couple of adjustments to how this account trades due to the current environment. With the settings I've been using so far, the delta hedging is too frequent for my liking, and the settings I'm talking about are in the Greeks Live delta hedging tool. So it's been hedging the delta a little too often, and as the price has been quite choppy, that's negatively affecting the returns. There are a few ways I could adjust this. I could stop hedging the delta entirely and accept more delta risk on the positions. I could increase the delta threshold so the account is allowed to accumulate more delta before the delta hedger steps in. Or I can lower the percentage of the delta that gets hedged, so the hedges are still relatively frequent, but for smaller size. Now for the time being, I'm going with the last of those choices, so I've edited the amount of the delta to be hedged down to 35%, so around a third of the delta will still be hedged dynamically. This of course leaves the account with more delta risk, particularly on any days where I have 2 overlapping positions. To deal with this, I will avoid overlapping positions for a few weeks to see how the account does. And what this means in practice is I will sell 2-day options on Monday, Wednesday, and Friday, with those options expiring on Wednesday, Friday, and Sunday, respectively. It's Wednesday today as I'm recording this, and I don't currently have any positions in this account after this morning's expiry. So I'll sell a strangle in the Friday expiry now. And Friday is the 11th, so we'll be looking at this expiry, but to execute in this account, I'm still using the Maker Assistant tool from Greeks Live. So let's head over there. And I'll be looking at the 76k put and the 79k call. Add a basis point to the mark price. And I'll add the call now at 79k. Remember to adjust your amount if you use this tool because it does reset back to 1. Submit the run. And now this tool will handle both of those orders. If I go back into the account, we'll see them be added soon. And we've got filled on the put side there. And that second trade noise you hear there is the delta hedger coming in and hedging some of that delta. As I've already been filled on the put side here, don't mind getting a little bit more aggressive with the call order. So I'm going to cancel this order here and place that one again, but without adding a basis point. If I wanted to get even more aggressive, I could take a few basis points off the mark price. There we are, we do get filled on the call side as well, and the delta hedging tool will step in soon, I'm sure, to hedge some of that delta back towards zero, if it's over the threshold, that is. So you can see we're now short a strangle, and we've got the delta hedging tool hedging around a third of the delta. So that's it for today's video. Thanks for watching, and I'll see you next time.